Well, hey everyone, welcome back. It's nice to be back. I think I'm good enough because, anyway. Let's see what the heck is going on in the market. First, we know some stocks have gone crazy up, some have gone crazy down. It'll be interesting to kind of catch up to see what some of the new pricing is. Obviously, this inflation slowdown is getting a lot of headlines. This is kind of something that I expected to really start happening between September and November. We're starting to see a little bit of those headlines grab attention sooner than expected. In fact, Bloomberg, Wall Street Journal, Economist, all these publications have run headlines about how inflation is now cooling or it's slowing down. And the biggest surprise of it all is that even though service prices and rents have gone up, we're just not seeing the prices go up as quickly as expected on month-to-month basis. In fact, I was even reading certain areas in the United States and certain areas in, for example, even London are saying, wow, we were expecting to be able to raise rents and we just can't. Like rents are more sticky than they first appeared. They might be. So, excuse me. I was hoping I wouldn't cough. But anyway, those are really interesting things to me that all of a sudden, maybe if rents don't go up the way we expected, we won't see that kind of inflation, and we will end up getting that downward inflection point, which is great for realistically the future of tech stocks and quite a lot of different high-value stocks, specifically SPACs, which we're seeing open doors skyrocket today. Let's go ahead and take a look at what's going on with the sticks. There we go. So, there we go. So open door particularly, it beat earnings today, it beat earnings, whether that was last night or this morning. But anyway, what's interesting is I think Open Door softened after the Zillow and Redfin earnings. Let's see here, though. One sec. That lingering cough's still there. But anyway, let's look at the day chart here. Because we know we've been sort of evaporating on Open Door. I don't have an Open Door position anymore, but I don't particularly see a movement after the Redfin earnings. Yeah, see, we had earnings on Redfin, which actually compressed Redfin earnings, but we didn't see that carry over to Open Door. Let's go to Zillow. Yeah, we did also see a downward trend on Zillow, which I did notice that Kathy Wood was buying more Zillow yesterday. But this Open Door move, see, Open Door didn't really rotate down. It's almost like it had already sold off enough. And I think it's potentially just almost all of the SPACs have just gotten destroyed this year. Like 2021, starting in February, has been the start of the destruction, I feel like, of all SPACs. And you really see that starting the middle of February. That's when you hit some of the highs on SPACs, and everything has almost turned back to the bottom. Even some recent IPOs, Palantir. Middle of February, end of January, those were some of the peak prices. And then we just rotated down since then. And so it makes you wonder if potentially if inflation is going to inflect down in September to October as expected, and we're starting to see signs of that now, then maybe we'll get what's known as this hunt for yield. In other words, yield-starved investors, hedge funds or whomever, go looking for yield wherever they can get it. And one of the easy places to get it would be, in my opinion, underpriced SPACs right now. Let's go look at SoFi, for example. Yeah, interesting. SoFi's back at 1737. Wow, it's really bounced off that 1481 level pretty hard here. I think this is going to be a theme now. See, first you get regular stocks bounce back, like Etsy, I don't know, Enphase, whatever, the Amazon, the Apple, the Microsoft, right? First, your safer techs go back, which makes sense. We've kind of seen safer tech go back. Then, after you have safer tech come back up, what happens after safer tech goes up? Well, you have crypto go up. Not a surprise. A little bit more risky, but also tech-ish, right? And that's really what we've seen the last week, really, here. Let me look at BTC, by the way. And now it's almost like it's the SPAC's turn. A little bit of a turn. Look at us bounce off this line here. Wow. That's interesting on crypto. So I've always had this 47,165 level set here. It looks like we started bouncing a little bit earlier off that. Look at that. We really ceilinged off of 46.8, about $300 less here. But that line, I'm going to actually strengthen this line a little bit because clearly traders are moving in anticipation of that line. And I'm going to draw a second weaker line right here. That's interesting. But anyway, that sort of triple rotation is potentially something you see. It's like, okay, let's prop up safer tech. Okay, those are expensive now. Okay, let's prop up crypto. Okay, those are expensive now. Okay, let's prop up SPACs. Okay, those are expensive now, right? And then slowly you get the entire market to move up. It's kind of interesting. It's just a theory, of course. Let's listen to CNBC for a moment. Let's see what they got here. Let's see if they got anything at all.
Meantime, in the US, in the crypto industry, they're building out its lobbying arm, and Washington is taking note. Of course, the infrastructure bill has had a lot of focus in that.
Nah, this is boring. I don't know. Their color's off today. Looks very faded today. I will pull off that. So maybe he's not in the studio. He's trying to trick us. He's from home. Anyway, these are some incredible moves here. I mean, look at this. Sen's coming back. Hims and Hers. Sonos. Sonos got beat up there for a while after they got dropped by Apple. Sorry, this cough is like so annoying. It's so annoying. So I'm going to just mute the mic, obviously, when I need a cough. But that is like, go away. Anyway, they got beat up pretty hard after they got dropped by Apple. It'd be interesting to see when they got dropped by Apple. Let's pull that really quick. Let me just grab a page here. Let's go Sonos dropped by Apple. Here we go. We'll look at it together. In the Apple stores, right? Apple, here we go. October 7th, 2020. Apple is dropping Sonos and other Apple, non-Apple branded products from their stores. That was sort of in anticipation of their speakers. So let's go back over here. October. Doesn't actually look like they had much of a hurt. Wow. I thought that was actually more of a catalyst for Sonos, but it really wasn't. I mean, you really saw nothing. They just didn't care. They just kept running. Of course, also that classic kind of mid. Actually, it looks like they ran through until about April, until they really started bleeding down here. Nice move to the upside here. So good job, Sonos. I wonder if this is in anticipation of earnings or if earnings came out. I'm going to pull up the terminal really quick here. Let's take a look here at what we've got. So Bloomberg, we'll figure this out together. But yeah, great news on Open Door. I do want to speak to Open Door for a moment. Open Door, you know, it's an iBuyer, which, if in case you don't know what an iBuyer is, it's basically a corporation that buys fixer-uppers, and it just pays sellers quick cash to close a deal with them. And the idea is that, hey, you don't have to deal with a home buyer, you don't have to deal with open houses or offers or all this kind of stuff, and we'll buy your house and we'll fix it up and we'll flip it. And their goal is to make, you know, whatever, $20,000 to $50,000 per property, and then do that, say, 8,000 times or whatever. Okay, for some reason, Bloomberg.com's not loading. All right, I guess we're not going to be going on to Bloomberg for a moment. We'll go somewhere else then. That's very weird because everything else seems to be loading. Anyway, we'll go to the Wall Street Journal in the meantime. Let's see, but yeah, I'm surprised they did so well on their earnings, or at least the market reacted so well to those earnings versus Redfin and Zillow, because they all did well on earnings. But I really think what it is Open Door as a SPAC has just gotten sold down so much. And you really have this element of, oh, it's a SPAC, sell it off, right? That was almost a move in February. Quite frankly, you could just go around and short all the SPACs or the previous SPACs. And that would have been a pretty profitable move for the last 4 or 5 months. Wouldn't surprise. There we go. Finally got this up. Wouldn't surprise me if that's something that we're seeing. And now that Open Door is actually proving itself a little bit with some earnings, we have a little bit of a pushback here. And by a little bit of pushback, I mean nice sort of bump there in pricing. So that's good. Good for Open Door. All right. Let's see here. Let's go jump on over to Sticks again here while we get the terminal up. All right. So great job, Sonos. Great job, Open Door. Let's see what else we have. Clove, that's interesting. They're at 920. They've kind of been sitting around this range for a while, though. In fact, we could see sort of our levels that we have drawn over here. This has kind of been a spot that they've been dancing under for a while. It's unfortunate. I've got a line drawn here at, what do we have it at? Is that 877? Yeah, it looks like we just broke through that 877 line, which is nice to try to see Clove go. Let's see if they can actually stay above, you know, the 877 now. We've been there a couple times before, but we tend to keep falling into it. One of the things to be careful of right now is you have this bizarre kind of market where shorting almost doesn't matter that much anymore. It's almost like shorts, people aren't just really caring about high shorts anymore. I found that ended pretty quickly after we did our workhorse trade. There was maybe another week of people caring about shorts, and then it went away, which is very weird. So hey, the market goes in phases, as we say. All right. So what else we got here? Yeah, momentum matters. Exactly. It's not just a matter of that short interest. It's where's that attention? Which, speaking of momentum, oh, look, Tesla's up 1.4. That's not momentum, though. Don't worry about it. It's very interesting to take a look at the Moderna chart. So Moderna has had this insane, in my opinion, like classic euphoric rally here. I mean, this is crazy, crazy, crazy kind of rally here. And not saying it's a bad thing. I mean, good for it, right? But boy, oh boy, I'm very shocked. We have gone to such high levels, especially for a company that really, I mean, I think their entire product line would have to be extremely successful for them to be even remotely valued at this level. And we don't expect that to be the case. We also know their EPS is expected to decline over the next 4 years. It's going to be great this year. This year they look like they're 16 times earnings, but 4 years from now, as their earnings decline off of these COVID vaccines, we expect them to be closer to like 100 to 120 times earnings. So that's pretty pricey at these levels. Personally, I think people are just fearful. They're just confused about where to go in this market. And that's why we're seeing this market make these weird moves here. But anyway, look at this incredible volume here on SoFi that you've had build up over the last few months. This has been a great one. Really looking forward to this one taking off. I don't know if it'll really run past that 20 to 25 level, but hey, if it does, I got some call options on it. I've also sold puts on it, which those will make some money as well. So it's good. Okay, so let's see here. This is interesting. Let's take a listen to this for a moment. Hold on 1 second here.
In battle. In Texas, a state senator staging a 15-hour filibuster to protest a sweeping Republican.
All right, never mind. I thought that was going to be more something else. I saw Afghanistan, some troops going back to Afghanistan to help evacuate embassy. I mean, one of the things that we'd always learned in, just over history is if you pull out troops out of a contested area, you create a power vacuum. And then it's possible that the enemy comes in and takes over again, right? And right now there's this talk about the Taliban essentially overthrowing the Afghani government. And so now it sounds like troops are going to Afghanistan just to help pull people out of embassies. I mean, it's crazy. But this is what you would expect when you pull troops out, that you would have a power vacuum. Now, I know that was a big priority of Biden's, but we'll see what that ends up doing in the Middle East. So I'm not saying we need to be the world police, but it's certainly something to be paying attention to. All right, so I'm going to take a brief look at crypto here. Looks like crypto in general kind of moving down with Bitcoin here, sitting at about, we did go to 299.9 on Ethereum. Look at that bounce on 299.9. You know people have their limits set to buy this thing as soon as it falls under 3. So that looks like it's exactly what happened here. So let's see here. All right. And then we've got, so Ethereum sitting at 3. Dogecoin's done a nice bounce off that 25 level. Nice. Good. And let's go to BTC again. All right, let's see what we have here. So BTC 44.4. Yeah, this is really where the softness is happening in the crypto space. So we'll see how this ends up rotating. I think you had a little bit of a euphoric run here, really from about the beginning of the month here, the 4th and 5th, sitting around that 37 level. But I mean, you could even really extend back another week. What's interesting is, I remember saying when we were over here, bouncing off this 37 level, people were asking me, Kevin, what's the next line? And I zoomed out and I'm like, well, it looks like the next line is right about 47. And what's hilarious is we basically went from 37 to 47. Anyway, one day the cough will go away. So anyway, yeah, the lines. But that's what happens when you have a stock that's or a security that's pretty well or an asset, I should say, that's pretty well traded. Like Bitcoin, certainly. Pretty heavily traded. Okay, so to the downside, we got Root Insurance. Pretty sure they're a SPAC as well. Not 100% sure, but I do wonder what happened to Root. A 20% move to the downside on Root. It's not a company that I invest in, but I would like to see why it's down this much. Let's go ahead and pull it up. Individual company news. We'll go get that out in one moment here. Yeah, okay. So Root revenue came in at 89.8 million versus 72 expected. That's a beat. It's a beat. But it misses FO, but the net was a miss. And guidance disappoints. Yeah. All right. Well, missed on 2 out of 3. Yeah, I guess that makes sense. And Vroom down 19.5% as well. I mean, these are some brutal moves to the downside. Look at this. Fisker just got destroyed. Something just happened at Fisker. Look at that. Within the last, 30 minutes? Let's go into the minute here. Oh, yeah. Oh, what just happened here? Well, yeah, within the last about 20 minutes. All right, let me go figure that out really quick. Let's see what we got here. So, Fisker, FSR. Let's see what happened to Fisker. Fisker, individual company news. All right. It looks like I actually don't know. Fisker is selling convertible bonds. I don't know. That was something about this is from yesterday. I don't know. Are they raising money? Let's see. I mean, that's what it looks like. But that was yesterday. Why is it suffering today? I don't know. Huh. Yeah, let's see. Capitalizing on the surge, Fisker made an announcement after the closing of trading last night. Okay. It was after yesterday. Yep. That it's selling 600 million worth of notes. Okay. Got it. That makes sense. So they're in the future, it's stock dilution. Now it's taking on more debt to raise cash, obviously. But it does mean stock dilution. So, I mean, so why would it just move within the last 15 minutes, though? Because look at that. That doesn't make sense. That doesn't make sense at all. Yeah. Why wouldn't you have crashed this morning? You know? Look at that. It was up at 1751 this morning. And then all of a sudden, just in the last 15 minutes, I mean, it could just be volume. It could just be somebody saying, that's it. I'm done with Fisker. I'm out of here. Maybe. And then here's another one that's just been volatile. Look at Shift. What is this? The thing ran to $10 after really good earnings. And just what? Now all of a sudden it's down 2 days. I mean, look at that. I mean, this is such a bizarro graph. Doesn't make sense. It's just people taking their tendies is what it is. The thing ran after hours. And then the next morning, you pretty much immediately got selling volume. Did you though? Let's go to 30-min. Yeah, it looks that way. Yeah. You got selling volume right when you opened. That continued on then to trigger some more sales. It was profit taking, but that has really continued today. That's an ouchies. A bizarro market. Very, very bizarre market. It's the thing. It's you could beat earnings, you could do very well, and then people take their tendies and they're out of there. Yeah. I've gotten COVID tested 5 times now. And it's really because this one stupid test is shows this slight line that's oh, you have COVID. And it's no, that just looks like a screwed up test is what it looked like. Everything else is negative. The PCRs, you name it. But I don't know, whatever I have, it's really annoying. I mean, I still feel like crap. And I think I was asleep for 14 hours. And when do I mean, that's usually how much I sleep in a week. So yeah, I don't know. That's just weird. Anyway, yeah, Cardano. Cardano's done incredibly well. This is amazing. 176. Geez, we were buying this thing at $1. Well, $1.04 and $1.08. Wow, what an explosion over the last few days. Good job, Cardano. I mean, personally, I would not mind another crypto sell-off because I still haven't gone all in to maximize my crypto position. But you know what I'm really curious about? I'm very curious. I can't test correctly. The Meet Kevin variant. Oh my gosh, y'all terrible. Yeah. But anyway, something that does make me very curious about the future of crypto is what happens. Hold that thought for a second, because I gotta cough again. This is so lame. Hold on. All right, I'm all better. All right, folks. So here's something that does concern me a little bit. And this is not designed to be crypto FUD, because you know that I love a crypto. But there can be truth in fear, uncertainty, and doubt, right? I actually like taking advantage of true FUD, like true fear, true uncertainty, true doubt, because those are the opportunities that I like investing. Now, obviously, the opportunity to buy something like Cardano at $1, we had that opportunity. I sent out alerts like 2 or 3 times when I was at $1 in the Stocks and Psychology and Money group. We talked about it on the channel. We talked about it everywhere. Which, if you're not a part of yet, make sure to use the coupon code down below. Take advantage of that 40% off. Price does go up over time, and new lectures coming out this weekend. Anyway, what is a potential set of FUD that could come out with crypto going forward? So on July 18th and 19th, we had FUD over the Grayscale Bitcoin Trust lockups, which led to a surge of sales. And after this surge of sales, we ended up with falling prices. We hit lows around the 19th and 20th. In fact, let's go ahead and go back to those days. Let's go to the day chart. Okay, and let's go jump in over here. Look at that. Here's the 18th on Cardano. Here's the 19th and 20th, right after, like literally the 2 days after the lockup. I even did a video on this channel saying, hey, write down July 18th. It's going to be a big day. This is why you got to subscribe. But anyway, the same was pretty much true of all the coins. This is very, very clearly correlated with the lockups here. Same bottom, 29,295, right on BTC. So what is a potential leftover catalyst that we have for crypto that's a negative? Like, what is the only thing that I see that's left? So first of all, the DeFi hack did like nothing to our mainstream cryptos, which is great. I mean, you would expect that. You would expect the mainstream cryptos and CentralFi, CeFi basically, to be totally fine after the DeFi hack. The DeFi hack, hey, we'll see what ends up coming out of that. But what's more interesting to me is the potential for another negative catalyst this year. What is the only one that there could be? Think about it. One of the big reasons folks invest in crypto is as a true inflation hedge. About 40 to 50% of people invest in crypto for that reason, to escape money printing, to escape fiat, to escape government intervention, and to really have a people's currency. Well, what happens if, and potentially it begs the question as to why we're starting to see a sell down a little bit towards the end of yesterday and today. It makes me wonder, what happens if all of a sudden we start seeing those inflationary figures, and I know we don't all believe in the CPI, but what happens if we start seeing CPI reports coming in showing deflation in used car prices? Oh my gosh, used car prices, instead of being flat, went down -4%. And they offset rent prices going up by, I don't know, 1/3% or less. I mean, last time I think they went, last report they went up just 2.2%. You know, those numbers don't come in. And then all of a sudden we start seeing the August reading, which comes out in September, come in at 4.7% or something like that for inflation. Then the September reading coming out in October comes in at, I don't know, 3.8. And we end up at like 2.9 or 2.5 by November. Think about that for me. Right now, we're at 5 to 5.5% on the CPI readings. And imagine we get to November and the inflation readings are at 2.5%. And the Fed says, hey, you know, we started tapering, because I do expect them to taper. But because we started tapering early and inflation is going down, it looks like our taper is working. Watch them take credit for the taper working. Anyway, it looks like the taper is working. Inflation's going down. And then you know what they'll say? Looks like we might not have to raise rates until 2023 after all. That could be very, very good for some of our tech stocks. Very, very good. If they end up delaying rate increases because inflation comes down at the same time of the taper, that's great. Like at first, a lot of us were fearful of the taper coming. And it makes sense that we would be fearful of the taper coming because the taper coming is a signal that soon after a taper, rates are going to go up. But one Fed board member yesterday spilled the beans. He gave us the juice. He said, here's the thing. If we take the foot off the gas now, we won't have to hit the brakes as soon because we'll just roll out. That's a really good analogy. Really, really good analogy. I hate to say it. I like it. But just to make that clear, foot off the gas means no more printing money. Hitting the brakes means raising rates. So if you take your foot off the gas now, maybe you don't even need the brake. It'll be interesting to see what that does or the fear of that does to crypto. Now, don't get me wrong. I believe that crypto is going to do very, very well in 2022. But if inflation inflects down, I wonder if there will be a short-term trade opportunity where you sort of get a buy the dip. Anyway, that's just my thesis. It's something that I'm going to be paying attention to. And maybe I'm just saying that because I didn't buy enough during the last dips. I loaded up a few $100,000. I wish I put in more. I didn't. So who knows? Maybe I'm biased because I'm just trying to look for another dip opportunity. But realistically, what else? Right now we don't have a lot of other crypto fear or FUD on the horizon. You've got the North American miners are kicking butt after all the Chinese FUD that we had of them kicking out the miners. So what? This is great for like Hut 8 mining, for example. In fact, if anything, you'd probably want to buy stock in some of these. Now, of course, unless it rotates down more, because consider this. I mean, look, you've got Riot Blockchain, you've got Marathon, you've got Hut 8 Mining. These are some pretty incredible North American miners, but the price of their companies, because they hold so many crypto assets, mostly Bitcoin, at least at Hut 8, is so tied to the value of crypto that if crypto falls, obviously these guys will crash as well. So, but you just have to know that the value of these is almost perfectly correlated to whatever the price of Bitcoin is at the moment. But anyway, these are things to keep an eye on. The one thing that you can do, which is pretty cool, is you can go in and you can actually buy options on something like a Hut 8 mining, which you can't do on Bitcoin. So if you do have that similar trading path, in theory, you could go in here on a red day like today and go YOLO some call options. Now, I generally don't recommend YOLOing call options, but let's say you wanted to buy a call for Hut 8 mining for $5. So it's nicely in the money here. I mean, you're basically paying $7.70. That's too expensive. That's too much for me. I wouldn't do that. Maybe what I would do, though, is I would sell a put. Let me see. Sell a put. I'm not getting a lot of money for doing that. That's not that great. Let's see here. $560. Let's do a quick look. 560, 10 times 5 times 100. 5,000. That gives me about 10%. Let me go out to March. 13. Ooh. 1370 divided by 5 grand. Oh my goodness. Those are nice. Whoa. Whoa. Those are nice right now. Wow. Wait a second. So this would be like buying the stuff, which you might not get it because it could run away from you, right? If crypto runs. But you'd milk a big fat credit here. This would be like buying it for what is that? $3 and my brain is too slow right now. 63 cents. $3.63. So if you wanted to buy Hut 8 mining right now for $3.63, you could do that by selling puts, but there's a chance you might never get it if it sells over $5 come March 2022. Interesting. So now if I went for, I don't know, I'm just going to go crazy for a second just to see what it looks like. If I bought 1,000, okay, yeah, no, I'm not going to do that. If I bought 250 of those contracts, 250 times 5 times 100. If I bought 250 of those contracts, that would be $125,000 of collateral that I have to put up. And I'd be getting $34,250. That's 27%. That's not bad. That's juicy. You know, if I wanted to commit to something until March, I mean, you could probably do something similar to this to add like SoFi and stuff like that. But if you wanted to backdoor into something like Hut, hey, you know, that's doesn't seem horrible. Not financial advice, of course. But yeah, let's also briefly just look at a Riot play. I don't know. Let's go in here on the Riot, and then we'll get back to some of the more normal sticks here. So see, Riot's only down about 2% today. So I'd rather do it on something that's having more pain. Like here's an interesting one. Okay, let's say you wanted to buy Shift, just as an example, so you can carry over that crypto example. Let's say you wanted to buy Shift, but you're like, I just want to put my way into it. Okay, fine. So let's go over here, sell a put, 750 for December. Yeah, look at that. You get $1,100 right now. Really? Look at that. 7.5 times 100 times 10 contracts. That's $7,500. And I'd get $1,100. All right, I'd be getting 14.6%. That's not bad. It's like picking the thing up for $6.40 if it closes below that, right? These are the days to sell puts. On companies you want, though, you'd have to want the company. So if you do want to be in those kind of crypto companies, that's an option for you. But especially if you go out to March, you do run the risk that we end up having a crypto rally that just lasts into 2022. Although I think the inflation fears subsiding are going to be they're like the only negative catalyst right now that I see for crypto. So yeah, for what it's worth, hey, you know, keep that in the back of your mind. But look, even if you wanted to go into Coinbase, you wanted to sell some puts to backdoor into Coinbase because you wanted to buy some Coinbase, maybe, but realize you might just end up getting the credit and you might never get the shares. Anyway, that's that for the crypto talk. Thanks for watching the crypto talk. Okay, let's keep moving on here. Now I'm going to call. Oh, man, I'm sorry. But, hey, I just have to deal with Coffee Kevin. Hey, that's like me, Coffee Kevin. All right. I don't know why Shift is moving the way it is. It's a very low float stock. Yeah. All right. So let's see here. Hold on a second here. Yeah. Okay. All right. So where were we? We are here as okay. Open Door. Gosh, Open Door is still rallying too. Okay. We've got look at EXPI rally again. I think EXPI is moving off this news of Open Door really. EXPI is yeah, look at that. That's a nice move here on EXPI. Golly, that's good. I've got a bunch of EXPI shares. I did close out some of my call options on it. It was one of these rallies. It might have been this rally over here, so I could have held on for a little bit more, but that's okay. The EXPI kicking butt right now. That's awesome. Good. Oh, we've even got AMC up right now. Look at that. Back to 32.91. Very nice. Yeah. This is a very oh, you know what's so crazy? Holy smokes. Wow. Look at that. Wayfair, folks. I sent out an alert when Wayfair was like $230. I'm like, this thing always goes back over 300. And so I sold puts because I'm like, this is going to be an easy free credit. In fact, I wonder if I should close that option right now. Let me see really quick. That would be interesting. Let's take a peek at that. Why don't we? All right. Come on, computer. All right. So contracts. There's EXPI. We've got Hood. Got Enphase. Oh, we got lots of contracts going on here. Here it is. Oh, that's funny. I did this contract outside the New York Stock Exchange. That's too funny. Yeah, I'll just show you the contract itself really quick. But the thing was trading. What was this? This was July 30th. I posted this this alert that I executed this contract right outside the New York Stock Exchange. And I purposely picked 260 because I'm like, I wouldn't actually mind owning the shares. But that day on July 30th, when I did this, this thing was sitting at, so that was done on July 30th. Let's see what it was. I'm pretty sure it was like 230 or 234 or something ridiculous. It's crazy. But anyway, I think I probably have made all of the money on that contract. I'm going to look really quick to see if I want to close that out. But that was July 30th, right here. Oh, that's pretty close to the bottom. Okay, looks like it would have been somewhere around here, like this 243 number or something like that. Looks like the next day it went down a little bit more. And then it rotated up. So I didn't perfectly time the bottom, but come on. That's not bad. You got to give me that. That's not bad. Let me go see what that contract looks like right now. All right. So, but yeah, when I see things like that, I send out alerts and I'm like, yeah, no, I'm buying this. So let's see here. Wait for. Oh, it's Robinhood, right? Okay. Let's see what it actually looks like right now. Let's see how much money I made on it. It'd be curious because I didn't put up much collateral. Okay. Let's see here. Sold put. Okay, so I got a $20,800 credit on it, and I've already made $14,000 of that. That's awesome. Because this is I think this was November. So I've already made. So I put up. I don't even know how much collateral did I have to put up. Well, it would have been 5 contracts at 260. So 5 times 260 times 100. So I put up $130,000 of collateral to quickly make $20,800. But of that, I've already made $14,150. That's awesome. Okay, cool. So that's awesome. Good. All right. Let's see what else we got here. Disney reports after the bell. Ooh, we should see what reports after the bell. That'll be fun. All right, let's see here. Oh, yeah, why don't I make that difficult? Let's see here. No. Sorry, give me a sec. Why are they making it so difficult? They just do. That's just the way they do it. All right, whatever. I'll deal with that later. So, yeah, what else is reporting after the bell? Let's go ahead and pull that up. Let's see what we got after the bell. Let's see here. Okay, sorry, one sec. All right. So, okay, AMC, I want to see really quick what's reporting after hours. So let's pull this up really quick. So let's go ahead and get the earnings calendar. Okay, so Disney, Rocket, Airbnb, Sundial, Tattooed Chef. That's amazing. These are some good ones. Okay, good. That's very good. Those will be fun. Okay, so I have 5 puts, 260 on Wayfair. Let's see. And those were sold puts. That's interesting. Oh, that's interesting. Okay. I see. Okay. So then we have, Sundial Tattooed Chef reports as well today. Wish, DoorDash. We've got a lot. Jivo. Oh, my gosh. I'm going to pull these up. That's great. That is great. All right. Let's see here. Also, after this, by the way, I will be talking to Ross Gerber, which that'll be really fun. So after we do this chat. All right. So let's see here. We're going to start pulling some of these up here. Okay. Give me 1 second here. Beachbody reports today as well. And SoFi, really? Oh, wow. Okay. Jeez. That's great. All right. Okay, 1 sec. Pulling these up. We got the closing bell coming up as well. Okay. So slowly getting these up here. So Disney, SoFi, that's gonna be big. All right. It always takes a moment to pull these up. It's a little slow. Diz, individual company news. Okay, then we've got SoFi. We'll pull that up as well. We got the bell coming up in about 20 seconds. So I'll put them up here.
Communication services, energy, industrials, materials at the bottom of the pack. Cyclical commodity-based tilt to that. The energy, which is lower today, is higher on the week. The same applies to oil itself. Crude price is down about 0.5% today, but 1% higher on the week. Yields have continued to tick up this week compared to last week, with 10 years at 136. The dollar is higher today, only by 0.1%. But as we approach the bell on the stock exchange floor, the S&P 500 up 0.3%, enough for another record closing high.
Yeah, I can't believe the indices keep hitting records. Look at that. Dow pretty much flat, but slightly green. S&P up almost a third. NASDAQ up a third. Russell small caps down about just roughly a third as well. Wow.
Welcome to the closing bell. I'm Morgan Brennan in for Sarah Eisen, along with Wilfred Frost and Mike Santoli, CNBC senior markets commentator, as stocks settle.
All right, I've got Rocket Mortgage up. I've got SoFi up. I've got Disney up. We've got more, though. There's a lot reporting today. This is crazy. We've got Airbnb. Okay. Okay, Airbnb. Yep, we'll pull them up. Okay. So Airbnb. Oh, yeah, Tattooed Chef. We're going to pull that up as well. Okay. Okay. And Airbnb. Okay, what else do we have? Let's see here. Next is Sundial. Sundial and Wish. Okay, sorry. I just want to get these all ready here. Sundial, Wish, Jivo. Sundial, Wish, Jivo. Okay, let's get those up. Sundial. Oh, was Sarah sick too? See, everybody's sick. It must be a New York thing. Maybe. Okay, Sundial, Wish, and Jivo. All right. One more. Jivo, and then I got them all up. Awaiting Disney. Yeah, Disney's going to be fun. I think Disney. I mean, I love Disney. I mean, part of me hopes they crash so I can just buy lots of them because I really like them. Okay, no numbers yet. All right. Okay. All right. So now we are on standby. We have a lot of big reports coming out. Walt Disney, SoFi, Rocket, Airbnb. Airbnb just came out. Gross bookings came in at 13.4 versus an estimate of 11.17. That's bigger than expected. That's awesome. Okay, let's see what else we got here. Q3 nights and experience to significantly outperform Q3 2020, but be down from Q2. And below Q3 2019 levels. Oh, that's interesting. That's not such a good statement there. Let's see here. Q3 revenue well above Q3 2019. Okay. But Q3 nights and experience, but be down from Q2 and below 2019. This is interesting. Okay, I mean, this sounds really good. The booking volume came in like crazy, very good. The revenue came in at 1.34 versus 1.27, which is a beat. They're expecting revenue to be well above Q3 2019 levels. So I wonder if this is just a misprint here. Maybe not as good as Q2, in other words, is what they're predicting. So still thinking things are going to be very good for next quarter, but just not as good as what we had this last quarter because of the variant. Okay, that makes sense. I wouldn't be surprised to see Disney say something like that as well. SoFi has not reported yet. So if SoFi's moving, it has not reported yet. Yeah, at least I don't have it yet. Sundial, Wish, Chivo. All right. Okay. Standing by for other reports. Oh, wait. Disney just came in. Disney comes in with an adjusted EPS of 80 cents. Q3 revenue of $17 billion with a slight beat compared to the $16.80 expected. That's crazy. $16.8 billion. Subscribers for Disney Plus beats estimates. We have 116 million paid subscribers. Disney Parks and Experiences revenue comes in at 4.34 billion. We've got revenue at 17.02. We mentioned the subscriber number actually beat. Excuse me. They were expecting 113.1 million subscribers. They ended up with 116 million subscribers. Very good beat. That's awesome. That's really good. All right, so let's see here. Okay. Yeah, Disney's up 2.5% on that news now, so good job, Disney. Okay, Rocket Mortgage just reported, coming in with adjusted earnings of 46 cents versus an estimate of 48. It's a slight miss on Rocket. That's a miss on revenue and a miss on EPS. So Rocket missed. Airbnb had a loss of 11 cents versus a consensus loss of 48 cents. That's really good. That's good. And let's see here. Wish misses. Big miss on Wish. 656 million versus 722 expected. Yeah. Okay. So Disney's crushing it. I'm waiting for SoFi. Rocket just missed. Airbnb crushed it. Tattooed Chef is on standby. Sundial's on standby. Wish missed. Jivo just put out their 8K, but no summary. And so I don't, it's not going to be as exciting for me to pull that up. It's going to take too long to go through Jivo. Disney right now, let's look at it. Disney right now is up 3% in the after hours on this news. Great job. Airbnb, there goes the buying up. I'm just kidding. 3%. It's not that big of a deal. Airbnb is actually falling again. I think because one of the labels was very misleading as to, is it going to be worse than 2019 or is it going to be better than 2019? So I saw both. So that was really weird. So that was confusing. Wish is probably not doing too well. Oh, yeah, no. Wish is getting destroyed. Wish is doing the worst. 7.65% right now. That's not good. How's SoFi? Oh, SoFi just plummeted. Hold on. Let me see. I haven't seen the earnings yet. Let me pull it here. SoFi. I don't see it yet. I don't actually see the earnings yet. I wonder if that's just like somebody on the inside dumping. That'd be a problem. That's weird. Yeah, let's see if I can find out. See if I can maybe even just Google it, because there's no indication that it's out. But who knows? Maybe they posted something on their website. Investor relations. No, I've got the term up as well. Still don't see anything on SoFi. Corporate overview, releases. No, there's nothing posted on their website yet. So there's nothing to suggest this is definitely an earnings. There's nothing under their SEC filings. Did it go through the SEC already? Yeah, Gevo earnings. Yeah, give me one sec. I know Gevo came out, but there's no summary. You could just pull up their 8K, unfortunately. Like for some of the smaller companies, we don't get a summary, so I don't know what the expectations are or anything. No, there's nothing on SoFi yet. So why SoFi is plummeting the way it is, I don't know. But yeah, SoFi now down about. See, I think this is an individual. Like somebody's selling it, or something happened here. Like you just all of a sudden had big volume in the after hours, because this is not earnings related. That is weird. Yeah, I don't know what that is. It's just weird. Okay, let's pull up. Okay, here we go. SoFi. Okay, now SoFi reported. SoFi just reported. Okay, also no summary, which is very annoying. I could share this though. So total member growth 113%, up 8th consecutive quarter. Quarterly net revenue up 101%. This is their first report after the SPAC. What we're really looking for is now the warrants aren't going to weigh them down. So I would expect them to do a lot better since the warrants aren't weighing them down. But we'll see. Obviously, still expecting them to lose money for a few years. They're still a pretty early stage company. Okay. Let's see here. What is this? See, that never reads, right? SoFi recorded a $165 million net loss for the second quarter of 2021 compared to net income of $7.8 million last year's second quarter. We remeasured our valuation allowance during 2020 to allow for deferred tax liabilities. Okay. Okay, got it. So tax scams. All right, so what do we got? Let's look at some of their actual numbers here. So total net lending, it's a pretty big bump, 73% bump in total net lending. Servicing rights, I don't understand this. This is going to take some work. Look at that. It's a decline of like 99%. For servicing rights, change in value or something. Okay. SoFi's results can be a little messy. Home loans up 48.9%. Personal loans up 188%. Wow. Student loans up only 9%. That doesn't surprise me that student loans aren't up that much. But I mean, you've got growth in all of their lending services. Financial services, significant growth. All right, let's see here. What do we got here? Total net revenue and financial services. Wow, that's pretty good. 17 million in net revenues compared to 2.4 million last year in the same quarter. It's good. In their money, and then they have the different aspects here. So they made about 42. Looks like, is that 42? Hold on. Are these in thousands? Thanks. This says in thousands. This here, this doesn't indicate, but I'm assuming. No, this can't be in thousands though, because they don't make billions. So this is confusing. They're not giving us a definition on this chart. This might just be. See, this is in thousand. Financial services. Total net revenue, $17 million. Okay. And these are individual products that made money. The invest, the credit card, at work, money. I'll have to figure out. That could just be the nominal numbers here. Whoa. Look at their account growth. They've doubled their user accounts. Hold on, let's go back up over here. Is that true? 40? No way. Really? Over the past year, more than doubled its number of accounts. Wow. Through growth and acquisition of existing clients. Okay. I wonder how the market's responding to it because I'm not really getting a good summary on it. So it looks like its Q3 revenue is a slight miss, and its EPS is also a miss. I mean, it looks like it's missing, but the market is not punishing it that much. So you look at that, down about 2.8%. Yeah, those nominal numbers of quantity. Nothing. Yeah. Okay. Thank you for that. Thank you for that. That makes sense. So that would be users for that. Okay. Interesting. Yeah. It just didn't make sense otherwise. But anyway, I think the market's having a little trouble digesting what the heck is going on with SoFi. Let's see what's going on with Disney. I see a lot of commenting on Disney. Yeah, Disney's up about 4.8% right now. Good job, Disney. Great company. It's one of my faves. I mentioned them in a video yesterday, I think. No, I did, actually, saying in my video yesterday that they were one of my faves. But Wish just getting wrecked. Oh, Tattooed Chef is down 5.2%. Let's see what happened to that one. Hold on a sec. So that means they must have reported. They also don't give us a summary. See, some of these smaller companies, okay. Some of these smaller companies, they just give us this this print here. Announced financial results for 3 months ended June 30th. Okay. Blah, blah, blah. The growth we've experienced. Okay. So let's get to their actual financial chart because obviously the market's not very happy about this. So let's get down to their numbers. Okay. So these are where their numbers are. So this is where we generally want to pay attention. Remember, anytime you read like the little bylines or the previews or whatever, they're really just going to try to sell you on the company, which, don't get me wrong, I mean, it's nice to see their sort of idea or version or whatever, but yeah, this is where the things matter. So let's look at this. Revenue. All right, that's 103 million of revenue in the 6 months ended. Well, I want to look at 3 months ended. That's not that big of growth as you would have expected for Tattooed Chef, I have to say. 50, I mean, don't get me wrong, 50.7 million divided by 34.7, it's still good, 46%. But from the bottom of the pandemic to now, especially since they were just really ramping, a 46% increase, probably not the fastest rate that the market was expecting. Cost of goods sold, let's see how COGS went up. 42.7 divided by 31. COGS went up 37%. Good. So that actually leaves a little bit more profit. So that's good. Operating expenses. What happened with OPEX? I think that's their advertising. I think their advertising went up through the roof. Yeah. The loss versus the profit last year. Let's see if we can figure out exactly why. Okay, this is cash, liabilities. That's stable. If we could get a breakdown, though, of their advertising, that would be nice. But we probably can't. Let's try. Let's go TTCF, Investor Relations. Okay, let's go over here. Keep in mind, in 10 minutes, I'll be with Ross Gerber. We'll do an interview live, so that'll be fun. And let's see here. If we can get a little bit more detail. This is what we just looked at. I really want to see their ads. So let me try to get their SEC filings. No, it's not up yet. Darn it. Filings. Let's see. TTCF. Okay. Can we get a reason? No, the filings just aren't up yet. So I really want to see what happened with advertising, because I think they spent a bunch of money on advertising and it just wasn't I don't think their ads worked very well. And their sales still went up, but that's just still where I was a little nervous. I want to see those ads are working. So it'll be interesting. I mean, this is not bad. They did have a wider loss than expected. But, yeah, I mean, they're still growing. But I don't think they're growing as much as folks expected them to grow. Okay, so CNBC is talking about SoFi.
Higher after reporting earnings just moments ago. The company beating on both the top and bottom line. And joining us to break down those numbers is Mark Skatovich from Rosenblatt Securities, along with the
Yeah, how did Rocket Mortgage miss and now it's up 7.6%? That's crazy.
Alex, I'll come to you first, since I know you've been combing through this release. I mean, certainly this is subscriber numbers, 116 million for Disney Plus, which was better than the street expectations, really getting a lot of attention. But what stands out to you so far looking at these results?
Yeah, that's the big one. And just in general now, a total of 174 million subscriptions across Disney Plus, ESPN Plus, and Hulu. That's not an apples to apples comparison to, say, Netflix, because the same person could subscribe to multiple of those services, but it gives you a general indication of how successful Disney has been transitioning its business to streaming. Netflix has, let's say, 210 or so million subscribers globally. So Disney is really catching up quite quickly to Netflix, even though it just launched several years ago with its streaming products. So Disney wanted to put forward this narrative that it should trade at a multiple closer to Netflix because Netflix has been the dominant figure in streaming and Disney's catching up. And they are doing quite well on sort of pushing that narrative successfely to investors. And that's why you see the stock up today.
Yeah, it's some key context right
Alex,
there, because it does almost... Oops, sorry. Go ahead. Go ahead, Will.
My bad. I didn't realize as you. I was actually going to say, Alex, I love the piano in the background. I feel like you need to round out this.
All right, I'm going to pull off this. Okay, very, very interesting. So particularly curious to see how things develop here in crypto. But in terms of some of these earnings here, I mean, hats off to Rocket for missing and yet still going up in share price. That's very bizarre. Good job, Disney, for getting back to the 180s, because it's been sitting under those for a while. And unfortunate for SoFi, Wish, and Tattoo Chef. Look at this. It's your SPAC and your newer companies here just absolutely getting wrecked. So not so ideal here. Not so ideal. So very unfortunate. In the meantime, you do have crypto still sitting at that 44 level. Tiny little bit up in the last bit here. Tiny bit up. Looks like the last couple hours we've been sort of rotating back up from that bottom of 43.7. Be interesting to see how this moves over the weekend here. So ABC, hey, no kidding. It's been a crazy week. Okay, very well. Well, thank you everyone for being here. I am going to head on over to the interview with Ross now. So you're welcome to join me there. Appreciate y'all being there. Hope you come on over. In fact, if you stand by, you can click a button. It'll pop up. Otherwise, click the link down below to join the course. Make sure to get your free stock with Public by going to metkevin.com/public. It's totally free. metkevin.com/public. They give you free stock. They don't sell your information like other brokers do. And folks, we'll see you in the next one.